Hi, it's Peter Schiff. This is Tuesday, June 23rd, 2009. Well, the dollar got hammered today, despite the fact that we had, no rally really at all in the stock market. So the dollar surrendered everything it gained yesterday on the back of the 200-point drop of the Dow, and then some. And the dollar index once again closed back below the 80 level after having traded above 81 just yesterday. And I think the dollar is reacting to the two-day Fed meeting that's coming up, and we're going to get some kind of statement out of Ben Bernanke. And the interesting thing is he's trying to walk this tightrope, and the whole thing is just a PR effort. What he wants to do is try to let the market think that he has some kind of exit strategy for quantitative easing, which he doesn't. There is no exit strategy. Of course, they pretend that there is. At the same time, he needs to reassure the market that they're going to keep buying treasuries, which means they have to keep printing money, and that they're not going to raise interest rates anytime soon. So on the one hand, he has to say that he's going to create a lot of inflation. And on the other hand, he has to say, don't worry because I'm going to rein it in. I think it's an impossible task, and I think the market is setting up to sell the dollar off, as I warned about yesterday. I think the charts are increasingly getting more problematic for the dollar, despite the fact that we had a relatively successful two-year note auction today. And it's interesting, people are happy when the government is able to sell $40 billion of two-year notes. The fact that we're able to sell it is not a good thing. It's actually a bad thing in the long run, because in 2 years, the notes are going to mature. And what happens if we can't roll it over? What happens if interest rates go up? And of course, the money that we're borrowing, it's the government that's borrowing the money. What's the government doing with that money? They're increasing the size and power of the government. They're undermining our economy. It would be much more successful in terms of reforming our economy had no one showed up for that auction. Had foreign governments not been willing to loan our government another $40 billion so they can do $40 billion worth of damage to our economy and leave us $40 billion deeper in debt. We need our government to stop borrowing money and stop spending money. And the best way to achieve that result is for the people that are lending the U.S. government the money to stop doing it. Now, eventually they're going to stop when they realize that we're never going to pay them back. And the ironic part about it is the more money they lend us, the more or the less likely we are to pay them back. And so at some point, they're going to come to their senses, although they haven't come to their senses today. But I don't think it's something that we should celebrate. Anyway, we'll see how the Fed reacts or what kind of statement it makes. And I don't think the market's going to believe any of it. Also on the Fed today, President Obama was praising the Fed and praising Ben Bernanke. Now, he's coming up for reappointment. And in his praise, President Obama said that he thought that the Fed did a much better job than other government agencies. Well, I just can imagine, how abysmal the job that these other agencies did, because as far as I'm concerned, the Fed did the worst possible job it could have. And that Ben Bernanke has been as bad as his predecessor, Alan Greenspan, and does not deserve to be reappointed. Although, in all likelihood, he probably will, unless, everything really hits the fan before the next appointment, and then they might, out of desperation, try to rearrange the deck chairs. But as it looks like now, they'll reappoint him. And not only will he be reappointed to the Fed, but if this new bill passes, he'll be reappointed to a much more powerful Fed. And so Bernanke will have a lot more power with which to inflict a lot more damage on our economy. I mean, this new bill giving more power to the Federal Reserve is the worst thing we could do. And of course, it's not just the Federal Reserve that's getting more power. It's the government. We're getting new agencies like this new Consumer Finance Protection Agency. I mean, what consumers need protection from is government. It's from government agencies, from government meddling in the economy. We don't need another government agency that's here to protect us. I mean, if you want to look at what governments are doing, look at what happened just yesterday with Fannie and Freddie and a couple of congressmen, including Barney Frank. Apparently, Fannie and Freddie decided to tighten somewhat their standards with respect to mortgages on condos that the government will guarantee. And basically, if you want to buy a condo, if more than 30% of the units in that condo are vacant, right, then you cannot get a Freddie and Fannie guaranteed mortgage. Also, if better than 15% of the units are in default or delinquent on their dues, on their homeowners' dues, you can't get a Fannie and Freddie mortgage. And I think also if better than 10% of the units are owned by one individual or something like that, then you also can't get a loan. And of course, it makes sense. What they're trying to do is stay away from a situation where they finance a mortgage and then the buyer doesn't pay, and now they're stuck with a condo that they can't sell. And if they can't sell it, how are they going to get the money back that they loaned out? So it makes sense that Freddie and Fannie are tightening these standards, and they don't seem very tight. Also, just because you can't get a loan guaranteed for Freddie and Fannie doesn't mean that people can't buy condos in buildings where most of the condos are vacant. They just can't get a government guaranteed mortgage. They got to get a mortgage from the private sector. And of course, the private sector is going to be much stricter in the way they dole out the credit. So the rates are going to be higher, the down payments might be higher, but this is what we want. But now a lot of the real estate developers and condo builders are pressuring Congress, and what is Congress doing? Congress is now pressuring Freddie and Fannie to loosen up on their lending standards for condos so that more of these condos can be sold. But that's not what we want. Why do we want to encourage lax lending standards? If people are buying a condo in a high-risk situation, and obviously, if 40 or 50% of the condos are vacant, right, then if you're buying in there and if there's a problem and you have to sell, you can't get out because you're competing with all this inventory. And so we want to have stricter lending standards in that circumstances. We want to make sure that the people who are buying these condos can make their payment, that they have a big enough down payment to ensure that they're going to make their payments. We want to get away from high-risk behavior, but the government doesn't want that. And what we need is if the private sector won't finance the condos, then we need the prices to come down. If the prices come down, then maybe the buyers will be able to pay a level that makes sense. And of course, also, what this is trying to do is trying to encourage the construction of more condos. That's the last thing we want. If it's difficult to sell condominiums, then that's a signal to developers to stop building them. And if we stop building them, then that'll help reduce the future supply. We need to allow market forces. And it's interesting that a lot of these politicians, like a Barney Frank, who are criticizing the lax lending standards of the past, and of course, they didn't criticize them when it would have done any good. They criticized them after the fact. Now here they are beating up on Freddie and Fannie, trying to loosen the standards even more. And also, I saw a news story that came out today that supports what I've been saying about inflation and prices. And it was a news story from Saks Fifth Avenue and Neiman Marcus, where they are dramatically reducing their new orders because they want to have a much smaller inventory so they can have higher prices. They don't want to get stuck with excess inventory. They don't want to have to discount their merchandise and put stuff on sale. They said they want to create a sense of scarcity. They want fewer products on the shelves so they can charge more money. And that's exactly what I said was going to happen, that we're going to see big increases in price even though there's less demand, because we're going to have a reduction in supply. And so we're going to have Americans buying fewer items, but there's going to be fewer items on the shelves to buy. So those items that are purchased, people are going to pay a lot more money. And the retailers can continue to shrink capacity. They're going to get rid of unneeded square footage. They're going to have a lower inventory. And we're going to see a rise in prices even despite decreasing demand and increasing unemployment. In fact, look what happened to the price of sugar today. Sugar surged, I think, 5% to a new 3-year high. And you're seeing strength in commodities. You saw a lot of strength in commodities today on the back of dollar weakness. So again, despite the fact that the economy is weakening, we're still seeing upward pressure on prices. And if I'm right on my reading of the technicals for the dollar, if the dollar really breaks down decisively here and moves down towards that 70 level, which was the all-time low back in last August, that's going to put incredible upward pressure on prices, and the economy is still going to worsen. Even Barack Obama today is now admitting that unemployment is going to get over 10%. Of course, it was interesting that he assured us that if we passed this stimulus package, that it wouldn't get any higher than 8%. We got the stimulus package, which is actually a sedative, and here we have 10% unemployment. Unfortunately, it's going a lot higher than that. That's it for today. I'll be back again soon.